this smart money trap strategy has made me over 6-figure in payouts. So I'm going to give you the exact step-by-step guide on how to use it today. So I'm not wasting any time. Let's get right into it. So as you can see, this is a trade that I caught on the 3rd of October, finally in a 1-3 RR. So I managed to finish with 3% in this trade, and it only took me from 8 a.m. all the way till 9:50. So just under 2 hours for me to bag 3% in the market. So I'm going to break this down completely in how you can use this. But before we get right into how to actually trade this trade, there's 3 things that I need you to understand. The first thing is how to actually identify smart money trap areas. So you might be thinking, what is a smart money trap? A smart money trap is a weak supply or demand zone that is made to look like it might be a valid supply or demand, and actually catches these smart money trap traders out in the market. So they might think that, okay, I can trade from this supply and demand area, which it actually ends up being a smart money trap, giving them a fake reaction to then completely take them out and induce them. So you might be wondering, how can you actually identify these in the market? So let me break it down for you. So as you can see, this is normal price action in the market like this. This is how price action is going to normally be moving in the market. And you might be thinking, okay, in this type of market, how can I realize that, okay, this might be a smart money trap, this might be a valid supply and demand zone, and what else? A valid supply and demand zone has 3 things that you need to tick. First thing is, of course, it leaves a valid area for supply. So it has a valid area like a IFC candle at top, engulfed candle. It's just a nice little zone that's very clear high or low that you can see in the market. The next thing that I need to see is, did this high end up leading to a break of structure, which in this case it did. So this high led to a break of structure, and was this move a big impulse in the market? And an extra one that I like doing is, did the high come from an inducement? So did this high induce anything before making the move down? These are like the 3 main criteria steps I like to tick before actually saying, okay, this is a valid supply and demand zone, and is it actually something to trade from? Now you might be thinking, okay, if that's a way to validate them, how do you invalidate them? And it's just the complete opposite. So one of the big factors I like using within this is that, did this high break structure? That's the main thing for me. Did this high break structure? So did this high create a new low? Because in a supply and demand area, that is the main key point that you want to figure out. Did the high or low that you're trying to mark as supply and demand, did it break structure to the high or to the low and make a new high or low? In this case, did this high end up leading to this low right here to be broken? In this case, no, it did not lead to this low to be broken. So as you can see right now, this low did not get broken like this. So that means that this is invalid, an invalid supply zone. So this would then become that smart money trap. So we have that smart money trap in this area, and we can mark it out, and then we can go to the next step. So that's one thing. To validate a smart money trap, did it break the low? If it did, then it could be a valid supply or demand zone. If it broke the low or the high, did it come from an inducement? That's an extra one. If it didn't come from an inducement, it's just sitting in the middle of nowhere. Like in this case, it did, of course, come from an inducement, and it induced this high right here, and it gave a reaction to the downside. But the main key point is that it did not make a new low. So this smart money trap is due to be pushed past and fail. So the next thing that you want to know is external and internal price action, and finding external and internal inducement points. So you might be thinking, okay, how can we figure this out? So let's say price action looks something like this, and you might be thinking, okay, how do I figure out what is external and internal? Let's say this is the 15-minute, or you can use this on any time frame possible, because time frames are fractal. So whatever works on the 1 minute works on the 1 hour, and so on. So let's say you might be thinking, okay, how do I figure out which highs and lows are internal and external? Because you might be thinking, okay, this low right here is external, or maybe this low right here is external, maybe this high here is external. How do you actually know what is internal and external? So when we need to figure this out, is we need to understand market structure. Market structure moves in 2 ways. It has main pushes and complex pullbacks. So in this sense, we can clearly see that we're heading bullish. We're breaking the highs, respecting the lows, and continuing to the upside. So you can see that we have a push to the upside. Then we have that complex pullback. We have a complex pullback. Next push, again, complex pullback, respecting the previous low. Then we have another push, and then a complex pullback, respecting the previous low. So we know that whatever highs and lows are making those complex pullbacks and main pushes, those are our external highs and lows, because that is what's making the actual price action happen and market structure happen. So we know now that this, from this low to this high, that's a main push. So this would mean that this high is an external high. From this high to this low, that's making that complex pullback. So this means that this low is an external low. So it's on the outside, external. Then from this low to this high, that's that next main push. So this high would be your external high. And then from this high to this low would be your external low right here, because that's the complex pullback. And again, same thing as before. Okay, so now we found out what is our external highs, but how do we figure out why these are now our internal highs and lows? So internal just means inside. So whatever it is from the last external low to the next external high, is whatever is inside of it is internal price action. So these are all internal lows. These are all internal highs. These are all internal lows. So whatever is within external point to the next external point is always going to be internal highs and lows. So that's one thing that you want to figure out. So in this case is that we found out that this is what's making up the market structure. So these are the external highs and lows, and whatever is within those highs and lows that we marked out is internal. So knowing these few things now, we can jump into the market and figure out how to use the strategy. So let me break it in a chart first. So in a chart sense, you might be seeing price moving like this, very random, like this. And then now we can start seeing what we can enter from and how to utilize it. So looking at this chart, we can see that we're heading bullish. So we're making a high. Let's make this a little bit lower. Respecting the low, pushing again, making a new high, respecting low, and it looks like we might be pushing again. So we might be figuring, okay, where are the smart money traps in this area? Some smart money traps that you can see in this area is this high right here, because this high right here did not lead to a new low. This low did not get broken. So that means that this high is a smart money trap area. So we can mark that out as our smart money trap, SMT. So it failed to break that low down here. So now what's the next step that we can look for? Okay, one thing that I like to do within my strategy is trade within a key time window. So for me in UK timing or US timing, I think it's a little bit different. I'll put it up on the screen so you guys know what US time will be. For London session, I like to trade from 8 a.m. till 9 a.m. That first hour of London session, that's what I like to trade. And then for New York, I like to trade from 2 p.m. until 3 p.m. That's my key time windows that I see. This is like my kill zone that I see the most trades happening within. So knowing that, let's say that this area right here, let me mark it in gray. So let me make it like a really light gray, so it's just about easy to see. Okay, so this area right here is my London session. We're coming nearly into London. This session right here, this section right here is where London's going to open, and we're nearly coming into it. So we're going to be waiting for price to tap us in within our key time window for the trade to actually be valid in this sense. So we've marked our smart money trap. The next thing that you want to now find is your external highs and lows on the lower time frame. So you can jump on the 1 minute to around the 3 minute. I would say this is my perfect kind of zone that I like to stick within, 1 minute to the 3 minute time frame. So if we jump on the 1 minute and 3 minute time frame, we can then start seeing that, okay, you start having price action look something like this. On the 1 minute, maybe it's a little bit more confusing. You might be thinking, okay, which high and low should I mark out as an external low in this sense, because we're looking to buy. So you might be thinking, okay, how can I figure this out? But it's very easy. You can just jump on the little bit higher time frame. If the 1 minute is looking a little bit confusing, what I like doing is jumping on the 3 minute, so it looks a little bit clearer. And then you can just start marking out the highs and lows that are very clear to see. So in this sense, you see that this low is very clear to see. You can see that this low is very clear to see. You can see that this high is very clear to see. So we mark those out, and this will be now the closest one to where price is right now will be your external low. So we can mark that out as a minor inducement right there. So after marking that out as our minor external inducement, now we can just get rid of this little chart right here, so it looks a little bit cleaner. So this is what it would look like on the 3-minute. This low is a valid low because this high got broken past coming from this low. So this low led to a breakout structure to the upside. So this is a valid external low. So we've got now our smart money trap. We have our external low marked out now. Now, what do we wait for? Now we wait for time to cause this inducement within our key time window, the 2 key time windows that I told you before, and then give us an entry criteria into the market. And then I'll teach you some extra things that you can maybe look at for price to be like an extra confluence for price to tap into before entering you. So in this sense, this might be an extra confluence, is that this low now led to a previous high right here getting broken past. So that means that, okay, this low might be a potential demand zone. And then putting in context with everything else, that this might be a smart money trap, we know that now this smart money trap is most likely going to be broken past. So this demand zone should be respected. In that sense, this can be like an extra confluence, but it's actually not needed. You do not need a demand zone, but it can just be an extra confluence. So in this case, I'll show you without a demand zone. So what we want price to happen is we want price to come into that smart money trap. This is where all the normal retail smart money concept traders are going to be tapping into, thinking, okay, we've came into a supply zone. Now we can start putting our sells, covering the high. So what they'll be doing is as soon as they tap into it, and even they see like a little break of structure on the lower time frame like this, what they'll start doing is that they'll start placing their sells on that break of structure, covering the high, and then they might be thinking, okay, we're going to be targeting these lows and we're going to be heading up higher. But in this case, we know that this is a smart money trap because of all the criteria that I told you that's going to happen. So what actually will happen in the market is that market will tap into the smart money trap, give you a reaction to the downside, maybe even build up liquidity, show you a little bit of sellers getting in control to trap traders into the market, into getting into sales. Then what it will do, it will induce this low that we marked out as an external low, and then actually give us the entry criteria that we need for us to now get into the market. Now we'll end up getting into the market, covering the lows, and then our TP will be the high of the smart money trap or the low of the smart money trap, depending if you're buying or selling. And then I would always try to aim for a 1 to 3-ish. So in this case, let's say we entered like here, and that's going to be around a 1 to 3 at the top. I'd always try to aim for your smart money trap to be around a 1 to 3 trade. So I try to stick within a 3 to 7 pip stop loss. I know it's very tight, but with this type of strategy, trust me, you can keep your stop loss as small as you want, because this is such an accurate strategy that it's going to give you that 1 to 3 every single time with quite a small stop loss. So in this case, let's say now we get tapped into the market, and now we're going to start seeing price rallying to the upside and actually giving us that trade and taking out all those sellers that were trying to sell from this area, thinking that this is the correct move in the market. They're all going to be getting taken out because we caught the correct trade. So now let's jump into a real life example that I took on the 3rd of October to explain how to mark this out on the real-time chart. So right now I'm on the 15-minute time frame, and I'm just finding out this structure that I was talking about. So you can clearly see we've had a high right here, complex pullback. Now we've created another high, complex pullback, and then the next move that we'll be doing is where we'll be taking our trade. So in this sense, we know that this is that low right here. And then another thing that I did not mention is that another area that you could find smart money traps to really form within is Asia range high and Asia range lows. They tend to be a lot of the time smart money traps, depending on where the market structure is heading. In this case, we're clearly heading bullish, as we're having legs to the upside in a bullish direction. So in this case, we know that our target is heading upwards, and you can find a lot of the time within the Asia session smart money traps. So in this case, you can clearly see that we have a smart money trap forming at Asia high. So let's jump on the lower time frame now, because we found our structure that we're going to be following. So let's jump on the lower time frame and show you what this will look like. So on the lower time frame, this is what it's going to look like. We have these lows and highs forming, and we've got this clear market structure in the market right here like this. And the next point that we expect to happen is that this low is going to respect the previous low and head up a little bit higher. So that means that this high did not lead to this low being broken. So this high would be your smart money trap. So let me label that for you guys. So we have this smart money trap area happening. The smart money trap did get tapped into a few times, but it was not close to our key time window and it was not broken yet. So what we wait is for price to come closer to a key time window. The tap and the inducement can happen within 15 minutes before the key time window and 15 minutes after. That's like the kind of buffer I like to give to these key time windows sometimes, but it can also happen right within it. So in this case, it happened just before the London session open. So we now marked our smart money trap because you can clearly see this high didn't break this previous low. So we tapped into the smart money trap. Then we need to find our external minor inducements. So in this case, we can clearly see that we have structure forming like this, and this would be our low right here. So we marked out our external minor inducement. So let me mark that out. We have that minor inducement marked out. And remember what I said to you in the last thing, that this would be your demand zone that you can use as an extra confluence in the game of trading, as it's always good to see trading as a game. The more confluences you have that you can add on, the better your trade is going to be, because you have more certainty that the trade is actually going to play out because you're just adding more fuel to the fire. So if you have more confluences that you can see, okay, we had the minor inducement, but now I can see that this demand zone is actually being tapped into at the same time while this is happening. This could be an extra confluence that can give you more certainty that the trade is actually going to play out. And then after we had this, tapped into a smart money trap, minor inducement into demand zone, right at session open. This is one of my entry criteria. We had a push up to the upside, and then we had a tap into this RIFC area. That this is one of them that you could enter from. So you could have entered from somewhere like here and then headed up higher. But in this case, what I ended up entering from is a market executed right at this 3-minute candle. You can see that we had a nice institutionally funded candle. So we had this big engulfing candle to the upside, closing nicely without a wick, entered right at the candle, and then we ended up shooting to the upside. And I ended up setting my break-even point right after we broke this high right here, and then heading for a 1, 2, 3. So in this case, I didn't aim for the top of the smart money trap, which is okay. Sometimes you can aim with past it, but if you're able to just aim perfectly for that top of the smart money trap, that's even better. And if you're able to get your 1, 2, 3 reaching for the top of that smart money trap, it's absolutely amazing. And like I said in the trade earlier that I was explaining up here, is that I try to stick within that 3 to 7 pip range. In this case, I stuck with a 6 pip stop loss, and it played out to a 1, 2, 3, and I managed to cash out $3,000 just from one single account with one single strategy. And you can see this day in and day out in all time frames. You can see this happening on the 1 hour. You can see these big smart money traps getting tapped into external inducement. Because if you're on a higher time frame, I would call it a medium inducement, but just think of it as an external inducement. Then you can see your entry points happening from that inducement, and you can enter straight from there, or you can add extra confluences, maybe like a demand zone, maybe like you can maybe add now a divergence. If you're trading EU and GU, you can add that maybe on GU it took this low while on EU it didn't, so maybe it had a divergence between them. But you can see this on all time frames happening. You can see this on the daily, you can see this on the 4 hour, 1 hour, 15 minute, 5 minute, 1 minute. It happens 24/7. And this is a very easy way to trade the market and find these nice setups. So hopefully this helped you guys. Make sure you go in the first link in the bio and you'll be able to see me trading this live and how I made even more money on another smart money trap trade. And I think I even caught a 1 to 10 on that trade. So make sure to go watch that video. And I hope this helped you guys out. And if you actually managed to catch any wins with this, put them down in the comments below or join my Discord. It'll be in the bio and you have a win section there. You can talk with everybody else. So make sure you join that and then share all your wins. And if you have any questions, you can ask me directly on Discord or on Instagram. And I'm more than happy to help. So I'll see you guys next video.